Continued bid to renew investors' confidence, the Nigerian Stock Exchange has embarked on plans to introduce new products to complement the equities and fixed income security offering. CNBC Africa's Tosin Olaseyinde spoke to Yvonne Emordi, she's the head of strategy at the Nigerian Stock Exchange, about the outlook for Nigeria's capital markets.
The outlook is really good. As we have seen since mid to the end of last year, the market has been on a climb, on a rise. And we're still seeing the same kind of traction this year. Granted, some investors are taking profits. However, the outlook looks good. Banks have just released most of their financials, and they had double-digit returns. So in terms of financial services, the outlook is very good, and that's translating across the board because the Nigerian market is growing still at above 6%.
We have seen renewed investment in the capital markets. There are more local investors in comparison to foreign investors. Is this sustainable?
The reduction in the number, or I should say in the activity of foreign investors in our market, is not anything one should really be too concerned about. What I would have been concerned about is if we were maintaining that 70-30 split between foreign investors and local investors. Any market needs the local investors to participate for it to be considered a healthy market. And when you have too many foreign investors, it creates a little bit of volatility for your market. So what I am considering is the foreign investors have taken some of their profits. They've helped us bring back confidence into the market. Again, as fundamentals of companies remain high, if they're healthy, the economy is growing, cash remains in the system, investors can invest. Our pension funds, for example, have trillions of naira with nowhere to put it. As long as the capital market is able to sustain a healthy rate of growth, I think we will continue to see local investors come back.
As you said, the funds have trillions of cash but limited options to invest in. When can we anticipate more products to be introduced to the capital markets?
One of the things that our CEO has been speaking about since he came into office 2 years ago is the introduction of new products into the market. We talk about 5 products in 5 years. We have, over the last 2 years, introduced 1 additional product. We were formerly trading only equities and bonds. We've added ETFs to the mix, and you're going to see some announcements around ETFs in the upcoming months. And then we're still working on derivatives. Those were another set of products that we were going to bring to the market, futures and options. That is not slated for 2014/2015, but absolutely there is a need for more products in this market, especially in investment funds, some of which we'll be bringing to the market very shortly.
The Nigerian Stock Exchange has a target of $1 trillion market capitalization. When and how are we going to achieve this target?
I always smile when someone asks me this question because I've heard it so many times. $1 trillion in market cap is definitely a goal. It's quite achievable with the right pieces falling into place. So we had talked about bringing the companies that are listed in specific industry sectors to the market. We're still working on that, the telcos, the agricultural firms, to name a few. Not to talk about new products, which are critical in increasing the market capitalization in any market. Now, the fewer products you have, the less market cap that you have. So if we just look at products, new issuers, I think we could definitely get there, especially with derivatives. Track records of companies or stock exchanges that have really accelerated show that between privatization and the introduction of derivatives, that's how they actually achieve the level of growth that they're looking to achieve. So with the products, reforms, the market structure, and technology, hopefully we'll be able to meet that objective.